Hello and welcome everybody to this ACT Middle East Treasury Summit pre-conference webinar. My name is Simon Jones and I'm delighted to be hosting this webinar for you today. My little bit about my background. My name is Simon Jones and I was formerly at JP Morgan. I'm a fellow of the Association of Corporate Treasurers and had a long career in both corporate treasury and banking in emerging markets in Asia Pacific, Middle East, and around the world. First of all, before we go into the heart of the webinar, I just quickly like to run you through some technical aspects. Hopefully everybody is also logged on to the website for the webinar where you'll find the slides. If you look at the bottom of your webinar page, you'll find a widget slide. There is a menu bar there which will give you access to various windows that you can move and resize around your screen. The yellow button is question to help with any technical difficulties that you may be having, and that can, we can get onto that quite quickly to support you individually. Importantly, the purple question and answer widget opens up a new window, and we like to encourage you to send us questions by typing in the window. Please don't leave that to the end of the call. We would love to have those questions streaming in through the call so that we can discuss them on the panel discussion later on in this call. In addition to that, there is a resource box where you can also get information post the webinar on other ACT events and webinars. I should add that this webinar is going to be recorded and will also be available on the ACT website in a few days' time, along with the slides that we'll be using as well. Right, now what I'd like to move on to is what we have planned for this webinar. To get us started, we're going to do a few polling questions. So hopefully everybody has now access to this on the site. And to get us started, we're going to ask you a few questions around the state of Treasury in your organizations, your day-to-day work, and key concerns that you may have. Following on from that, get ready for the questions. Following on from that, we will then go into a panel discussion of which I'm absolutely honored to have two experts with me today. Rory Fife, Chief Economist at MENA Advisors, and in addition, Jan Friedrich, who is a Senior Director at Fitch Ratings. I'm actually delighted to have them both on the call, and we'll give further introductions later on. So now let's go on to the polling questions. These questions will be published in our annual Business of Treasury report, and they will be part of a special spin-out survey for the Middle East. And the results will be at the annual Treasury Summit in Dubai later this year. So if we could move first of all on to the first question in the poll. So, what is your Treasury's team involvement in developing your business strategy? Please, can you log on and vote and submit your question? Thanks very much. A few more seconds. I've got some answers coming in. Okay, can we put up the answers? Great. Okay, so what is your team's involvement in developing your business strategy? And we see that we have a large proportion about providing information to the organization with regard to specific questions, and that's 48%, and we have another good proportion of people on the call helping actually define the strategy which is great to hear. We continually hear treasurers are getting more involved in the broader corporate strategy and are involved in strategic decisions much earlier on. And it's great to see that is also the way you're feeling from the audience today. So we can move to the second question, please. So on the second question, how strongly do you agree or disagree with the following statement? Our Treasury function is a strategic business partner for our organization. A little bit on from the previous one. So strongly agree down to strongly disagree or don't know. Please vote. And submit your vote. Okay, let's see the answers on that. Strongly agree is coming up at the top answer, which is terrific, and slightly agree. So, great to see that Treasury function is becoming a much stronger strategic business partner in your organizations, with more than 50% agreeing and smaller disagreeing. So great to hear from that. I think it's very much what we're seeing and hearing in the industry. So if we could now move to the next question. So this is a free format question, and we'd love you to please just give us a sense of what are the 3 professional and business challenges, if any, that's keeping you awake at night. Please just type into the box, and we'll then see the answers come up, and I'll give a sense of the themes that are coming up. And this will be great for the panel discussion later as well. I'll give a few more minutes to that to type that in. And I've got 3 more questions before we go into the panel. Okay, let's get a sense of the answers, please, on that. Okay, can we get a sense of the answers on that? Okay, let's move on to the next question. How concerned are you, if at all, would you say your business is about financial regulation at the moment? Extremely concerned, down to slightly concerned, to not at all. And then one final question, and then we'll move on to the panel. So click on your answer and hit submit. Okay, let's get the answers up, please. Extremely concerned is only 10%, which is good. So the top answer is slightly concerned, moderately concerned, 20-odd%, slightly concerned is 30%, and very concerned, 20-odd%. and so about 30% are pretty concerned about it, but not as high as maybe we've seen in the past as well. So great to hear, and obviously financial regulation is something we continually all need to deal with on a regular basis. We move on to the next question, the final question. How concerned would you say your business is about financial markets volatility at the moment? And this will get us nicely into our discussion with our esteemed panelists. So please vote from extremely concerned down to not at all, slightly concerned. Okay, let's see what the answers we have here. Great, there's not too many people that are extremely concerned, only 7%. Most people are moderately concerned to 28% very concerned. So obviously there's a lot of concern. I think volatility in the financial markets is something we're all having to deal with in our roles every day, and it's good to see that we're not extremely concerned about it. I would have to say that probably we all think that financial volatility is very much the new normal and something we're having to deal with all of the time anyway. But great, thank you very much for those results. Extremely helpful. Thank you for submitting all of those answers. We will continue this survey through other channels until the summit in Dubai in October, where we will then publish the full results. So it'll be an ongoing rolling poll that we will then share with you at the event in the annual Treasury Summit in Dubai in October. So now let's move on to the panel discussion. So looking at the results in last few questions, it's quite clear that geopolitical, economic, and financial markets volatility are still a major concern for us in the region. I'm absolutely honored to have with me two experts today on the panel who will share their insights on some of these issues with us. So first of all, I have Rory Fife, who's the Chief Economist at MENA Advisors, and I also have YLan Boureau, who is the Senior Director at Fitch Ratings, and both of them are online with us now. So first of all, Rory, could you just briefly introduce yourself and your background? Thanks very much.
Hi, Simon. Thank you very much, and good morning, everybody. My name is Rory Fife, and as Simon said, I am the Chief Economist at MENA Advisors. We are a regional economic research consultancy. I'm also the former head of economics at Qatar National Bank, which is the largest bank in the Middle East and Africa. I spent 7 years living in Qatar with them, and prior to that, I've been working on the Middle East and North Africa region for around 15 years in total, traveling and living all over the region. And I look forward to our debate this morning.
Thanks, Rory. And Jan, over to you. Jan, can we hear you?
I'm heading the Middle East Africa sovereign coverage for Fitch Ratings. In the region, we've got 32 sovereigns, and so we have a team that reviews all those ratings. Previously, I was for quite a long time at the Economist Intelligence Units, also in various capacities in forecasting and economic analysis. Great.
Thanks, Jan and Rory, very much. So let's go straight into the first question for you both. And in addition, please, audience, please feel free to putting questions on the questions and answer box, and we'll see those come in, and we will pick those up as we go through as well the panel discussion. The first question for both of you: when we gather for the ACT Middle East Treasury Summit on the 1st and 2nd of October later this year, what do you think will be the key economic challenges for businesses in the region? Perhaps each of you can tell me, what do you think are your top two concerns for the region between now and that date and beyond?
Jan, shall I do?
Great.
Rory, do you want to go first?
You go ahead, Jan.
Rory, do you want to go first?
Okay, I'll go first. That makes it easy, because I think the top concern, which I'm sure Jan would have mentioned as well, is oil prices, which are obviously very important for the region. I think they're very volatile at the moment. I think there's a big risk that oil prices are now going to be low for a long time, with developments in the US and the shale oil market. The cost of production there, the very low cost of production, puts a kind of cap on prices. And although we've got oil of $70 today, I think we'll see a response from the shale oil market, and that will kind of keep a cap on prices for the long term at an average of around $60 for a long time. That's a challenge for the region, because it obviously makes it hard for them to spend a lot of money, and we can expect fiscal conservatism for quite a long time as a result of that, leading to slower growth. So I think the current oil market, with OPEC stepping in and stepping out, cutting production, and then letting production rise again, all creates quite a lot of volatility. That makes it difficult for governments to plan and maintain consistent spending, and it makes it difficult for businesses. So I think that's the primary risk. And then I think my other main concern really is around policy. These countries all obviously have to diversify their economies away from oil, and making genuine improvements to the business environment is very challenging. A lot of them are trying. I think they need to, in order to successfully diversify, they need to make some big policy changes, like liberalizing foreign ownership, making labor markets more efficient and more liberalized as well, to tackle the high cost of labor in a lot of these countries. And they also have the policy challenge of the monetary policy not being independent, which I think is obviously very important for treasuries, with interest rates not being aligned to the business cycle. Interest rates going up in the US at the moment, leading to higher costs of funds in the GCC, where interest rates have to follow the US. So that's also a concern and a big challenge for the region. But I think that's enough for me, and I'll let Jan take over.
Yeah, no question. I agree on the importance of oil, but maybe trying to look through that. I mean, there's very little, or certainly almost nothing in the region more important from the creditworthiness perspective than the balance sheets of the sovereigns in say Kuwait, in Abu Dhabi, in Qatar, in Saudi Arabia, and so what we look at is essentially the direction of those balance sheets, and that depends on one hand, as Rory said, on the oil price, but that also depends on the direction of fiscal consolidation. And what we've seen in the last year is essentially a shift away from a focus on consolidation and towards greater focus on growth, for a number of reasons. To some extent because the pressure has eased a little bit as oil prices rose, but to some extent also because probably there was a degree of reform fatigue and rising concerns about discontent and rising concerns about really the degree and the extent to which the prior consolidation measures have hit the region. And just to give one example, the Saudi Arabia has been implementing increases in expat levies for some time, and these are really substantial sums that are being paid for expats, and as a consequence of that, at least as partly as a consequence of that, the total expat and expat population in Saudi Arabia has fallen by more than 1 million over the last year or so. Clearly, that has a massive impact on the economy, and that substantially affects really all aspects of business in the region. So overall, our main focus is on consolidation. To what extent it continues, to what extent it's sufficient to maintain balance sheets where they are or with relatively limited further damage. But on the other hand, of course, also we are looking on the impacts that the measures that are still being taken are having on growth and on business. And separately, the other big issue, of course, remains geopolitics. That's a long ongoing story, but it's probably also true that over the last few years this has come a bit more to the fore, with maybe some leaderships being a bit more willing to take risks, and so that of course remains also a core to our analysis.
Right. Okay. But both of you sort of mentioned the cost pressures in the region, and oil prices have recovered a little bit, eased a little. But do you feel that corporates and the region as a whole are still very focused on expense pressures? You mentioned, Jan, that investment in growth is starting to come back onto the agenda again. But do you still see the region very much focused on, reducing costs? You mentioned the consolidation of expats, reduction of expats, in Saudi. What's your thoughts on how companies are still very focused on cost reductions in the region?
So maybe from our perspective,
go on.
We are looking more from the macro perspective and from the sovereign perspective. Again, our impression is that governments have shifted a bit, and they are becoming more concerned about the impact on business. And I think they've been lobbied to understand the impact on business, and are so now treading a bit more carefully, so that the net impact on further measures, additional consolidation measures like the continued implementation of the expat levy in Saudi Arabia, like continued measures on subsidy reduction, may actually be offset by measures on other fronts, the citizen stimulus package or business support measures. So on balance, it may start to be becoming a more helpful environment in net terms, but that's still relatively balanced. And there is, of course, also a big issue that these different measures in one direction and the other affect different companies to a different degree. Yeah.
Rory, what is your thoughts? Is there still a laser focus on cost pressure in the region, or do you think it's dissipated a little bit?
Well, I think, talking about the fiscal consolidation, I think there's still pressure for governments to continue their consolidation, and part of that is because of the debt issuance. So, they've started issuing debt in the last few years since oil prices dropped back in 2014. They've gone from virtually, somewhere like Saudi Arabia has gone from virtually zero debt up to a much higher percentage of GDP. So they've got to be, as a result, they've got to be more fiscally conservative. They have to retain that access to international debt markets. They've got to be responsible. And even with oil prices where they are now, even if they stay at $70, which I think is unlikely, they will have to consolidate because the budget break-evens that they have are still above this level. And with the new debt pressures that they have, they can't afford to have large budget deficits. So the 10% budget deficits that we've seen in the past aren't really an option anymore. They'll have to keep their deficits kind of more, at a more fiscally responsible level. Yeah.
So it actually adds some better discipline as well in the region by having more debt in the markets as well. Okay, let's focus in on an individual market. It seems like growth's been returning to the UAE and the region. Do you feel the investment in growth is starting to have, to have effect, and is it starting to help with the region's recovery, or do you think this could potentially, falter further in the year ahead? And perhaps you could think about any examples where you are seeing growth returning or not. So maybe Rory for you.
I'm not really seeing growth returning. I mean, if you look at the non-hydrocarbon sectors, we're seeing slower growth in the large economies, Saudi and the UAE, and slower growth in other economies as well, Qatar included. We also, with OPEC output cuts this year, we're going to see slower growth in the hydrocarbon economy. So I think overall the region is going to slow down. As we've already discussed, the fiscal side is going to be tight. It's going to remain tight in my view. So I think we're going to continue to see slower growth. We've also got the global economies maybe reached its high point and slowing down now as well. So I think we're going to see growth of around 1%, 3% to 3% in the non-hydrocarbon sector across most of the region. But I would say I don't think that's a problem. I think that's okay, and that's a sustainable level for the region. So I think that slower growth is quite natural.
Jan, what are your thoughts? Do you see any bright spots on the horizon at all?
I mean, maybe just perspective. So in our view and analysis, we do see some fiscal easing, and therefore we also see a slight acceleration of growth in the region as a whole. I mean, the key thing is just it's not a great one. Our average for 2018 for the GCC was 2.5. We are seeing 3% next in 2019. But it's important to get a hold of a longer-term perspective that the growth rates that we had seen before 2014 in most countries are just not something that we can easily return to, that were essentially boosted by very, very strong liquidity and really very high but not sustainable. And I'm not sure. I sometimes still feel that there is a sense that, for example, in the UAE, a 5% growth rate would be the norm, and what we are having at the moment is unusually poor. While in fact it may well have to be more widely recognized that the current growth rate, or maybe a slightly faster growth rate, might be just the new normal for the region.
Yep. That sounds very similar to what I'm very familiar with China, where normal growth rate would have been 8-9%, and now it's more like 6% is the new normal going forward. Compared to Europe, that's still a nice growth rate. 3 to 5% is.
Yeah, that's a good point to make. These are really exceptionally wealthy economies in many cases, and for economies at those wealth levels, growth rates of 2 to 4% are very strong growth rates.
Yeah. No, I would agree. Yeah. So let's go back to the debt issuance question, and we've talked about the region is issuing a lot more debt. We said also that actually puts some good fiscal responsibility and discipline into the countries. But do you think that the record levels of debt that's being issued, we've seen even the corporates, we've seen the huge bond that's being issued in the markets from Aramco. Do we see that this record number of bonds and the size of these bonds are sustainable? And how long do you think this can continue in the current environment, bearing in mind the US environment as well, I'm sure? Maybe Jan, you could start with that one.
Yeah, I mean, from the sovereign perspective, it's really important to separate maybe the GCC into two groups. Really, those credits with those countries with very high sovereign net foreign assets, and actually relatively moderate break-even oil prices, including Kuwait, Abu Dhabi, and Qatar. For them, I mean, firstly, even if they continued accumulating debt, it would take a long time before it really became a more serious issue. Right. But then there are the others where, to different degrees, there is a deteriorating trend. There has been a deteriorating trend in the balance sheets. Saudi Arabia on a relatively favorable, relatively high or a strong level still, but deteriorating, and a relatively rapid deterioration in Oman in particular, and of course the deterioration is also still continuing in Bahrain despite the fiscal balance program. They envisage a stabilization of the budget, a balancing of the budget, but a lot of progress still needs to be done on that. For the first three, Kuwait, Abu Dhabi, Qatar, again, a fair bit of issuance is certainly maintainable and sustainable. For Saudi Arabia, Oman, Bahrain, we have obviously discussions. The governments are discussing the need for reducing their deficits. And I mean, we focus a lot on the degree of progress that they're making on this, on these programs.
Yeah. And Rory, your thoughts on this?
Yeah, no, I think Jan's absolutely right to split it up like that. Just to be a bit more specific, so I think like Oman and Bahrain if they didn't have support from the rest of the GCC, would essentially be really struggling at the moment, and would probably have to devalue their currency pegs. But as it is, they have support, and that kind of keeps them going on the balance sheet side. Then if you look at the top of the tier, as Jan said, you have UAE, Kuwait and Qatar, which essentially are pretty much can go on issuing debt sustainably at this rate under any oil price scenario. And then Saudi Arabia is obviously the large one in the middle, which could kind of go either way. So with oil prices above $50, Saudi Arabia is probably going to be okay with a bit of fiscal consolidation. But when you start getting oil prices below $50 down to around $40, then that's when you're going to see less support coming from the wealthy GCC sovereigns to the struggling ones, and that's when Saudi Arabia's balance sheet is going to begin to deteriorate. And I mean, this is a very long timescale that we're talking about, but that is when you begin to get problems over the long term. We have actually done an analysis on this, which you can see on the MENA Advisors website as well, in the report section. Where we
great.
Well, and it's obviously very important for treasurers because that risk of currency devaluation rises at the same time when you get oil prices down to around $40 for the long term, which is not inconceivable, I don't think.
Yeah, just a little bit.
So for Saudi, to put that into perspective, their sovereign net foreign assets are around 90% of 60% of GDP, and they had a deficit of around 6% of GDP. So that still means that they could pay for their deficits from their net foreign assets for 10 years. It's still a strong position, but again, the directionality is certainly downward.
Yeah, but a lot of European economies would be envy for that, wouldn't they?
Indeed, yeah.
There's a quick sort of linked question, just a short one. Just would love to have your views on U.S. interest rates. So Fed rate rises in 19 and 20. We've seen a pausing at the moment, but we've seen rhetoric around reducing rates to rates potentially going up as the U.S. economy continues to recover. Obviously, that has an impact on U.S. dollar rates for the region. What are your thoughts on U.S. rates going forward? Maybe Rory first.
So U.S. rates going forward, I actually think we've probably reached the peak of the cycle. My expectation is the global economy is going to slow over the next year. Just to put it very briefly, mainly because of China. I think the slowdown in China is the main factor that's going to slow global growth. That will impact the US as well. So I think we've reached the peak in the Fed rate hiking cycle. So that's probably good for the GCC region. It's going to stop the cost of funds going up too much.
Yeah, and Jan, your thoughts on that as well, rates?
Yeah, I mean, our perspective is slightly different. We are still expecting one rate hike each in 2019 and 2020 for the US. But maybe just on the implications for the region, I think one interesting and in a way attractive aspect of the GCC is that they are much more moving in line with oil prices rather than with global interest rates and financing conditions. Obviously, in many cases, the two also move together. But there's still a degree that they are moving differently, given oil prices can be influenced by geopolitics and so on. And that is, of course, one of the reasons why the region is attractive as a diversification investment.
Right. Yep. Fair enough. Absolutely. Okay, Rory, you mentioned in your past you've been very much involved and lived in Qatar for a long time. We've mentioned some of the challenges for growth in the region. What is your thoughts on the outlook on the Qatar economy and growth in that economy specifically?
So Qatar's a very wealthy economy, obviously. They're slightly distinct from the rest of the region in they are reliant on gas more than oil. And I think, in the long term, that's positive for them. The long-term dynamics for the global gas market and the liquefied natural gas market, which is their main export, is very strong. You know, demand from China grew by 38% last year for liquefied natural gas. Overall global demand for LNG was up 8%. And so, you know, Qatar is expanding its production by 30%, which will take a while, but that will be implemented from 2020 to 2025. They'll be building all these big new liquefied natural gas facilities. So that's a massive thing. And the global LNG market dynamics are actually quite positive because there's been a glut in production in new production facilities in the last few years. So I think actually we're going to see Qatar has that dynamic, which through the 2020s is going to be very positive for the country. And I think we're actually going to see another hydrocarbon boom in Qatar in the 2020s as these big projects are implemented, bringing a lot of people and investment into the country. So I think that's, you know, I mean, I think we're going to have kind of double-digit real growth again in Qatar in the 2020s. And they've got the World Cup, which will give them a boost. They've obviously had a tough couple of years. They've had the political issues in the region and the blockade, which they're now recovering from. The investment program for the World Cup, a lot of the infrastructure related to the World Cup has kind of peaked. So growth in the short term, just in this year and next, it will probably slow a bit. And because of the blockade and everything around that, they're being quite conservative on the spending side at the moment as well. So short term, probably a bit slower growth, but I think the long-term dynamics are very, very strong in Qatar.
Yeah, great. Yeah, and I mean, the global economy, gas continues to do well as a cleaner source of energy as well. In power generation, we've seen.
Exactly, yes. So I think, you know, you're going to see LNG demand is growing consistently at 4 to 5% for the last few years, and I think will continue to, as a lot of countries, especially in Asia, are switching to LNG as a source of gas, and Europe is switching away from dependence on Russian gas. So LNG is a very positive demand dynamics.
Jan, maybe I could ask you a Saudi question. We talked about the record amount of debt being issued and investment in the economies. And Saudi is a key one around diversification of the economy. How do you think this is progressing in Saudi, and what sort of evidence do you think we're seeing that you know, diversification away from reliance on oil is starting to happen in that economy?
Yeah, I mean, maybe background. So I mentioned initially that we are covering 32 countries in the Middle East and Africa, a lot of them very heavily dependent on natural resources. And there are actually relatively few of those countries that have not at the moment and have not had for quite a long time the ambition to diversify. It's just proven across the region as very, very difficult. Diversification is really, really hard. So we certainly don't see a great deal of progress towards diversification. I mean, but there is a slightly different aspect where you can maybe be more positive. When you think about diversification, normally what you're talking about is diversification of your export base, developing new products or different products that you can export. But of course, Saudi Arabia just has an incredibly wide import base. And so what they are now doing is at least trying to reduce the need for some imports that really in most other countries are developed and produced domestically, including things like health service and similar things. And so that is not really diversification in the sense that I would normally understand it, but that is something where progress is ongoing and where progress is actually plausible. On the bigger diversification, the export-based diversification, of course, it's also worth noting that if you really want to force it, it can be very, very expensive. And so in a way that is a worry as well as a hope from a creditworthiness perspective. The benefits of any diversification that might emerge in the long term from these mega projects, for example, is only likely to come in decades, while the costs may already be rising relatively quickly and may already weighing on the overall government balance sheets in the relatively near term.
Yeah. I think the imports one is very, very interesting, Jan, and I can certainly see that. And I've seen, I would even call regional champions starting to develop out of re-engineering their import base and becoming more reliant on developing themselves, some of those products that they've been importing and then actually exporting them to the rest of the region. I've seen that certainly happening, and I think you'll have more regional champions develop around that in the years to come. Anyway, I think we're pretty much up to the top of the time. I've tried to ask a few of the questions that have come in, so thank you to the audience for putting those questions in. We've weaved them in a little bit, but I'd like to first of all extend my huge thanks to Rory Fife and Jan Friedrichs for their support on this call. And I'd love to thank everybody for joining this session today. I'm sorry if we didn't have time to reach all of your questions. But as I mentioned at the start of the call, there'll be an uploading of this recording on the ACT website, and we'll send you a link. Importantly, you'll be able to see these slides as well. And also importantly, there are obviously the Middle East Treasury Summit on the 1st of October that's coming up in Dubai, and we'd love to see you all there. And in addition to that, on the day before, there will be the Middle East Treasury Awards dinner on the 30th of September in Dubai. And again, we'd love to see you all there. So thanks very much for listening. Please provide your feedback to this webinar. We'd be very grateful for that. There is a feedback widget in green at the bottom of the screen. And the facilities will remain open for a while so that you can do that feedback. So thank you from me, and thank you, Jan and Rory, and the team for putting this on, and goodbye. Thank you, Rory. Thank you, Jan.
Thank you, Simon, and thank you to the HTT.
Thank you.